Hey guys, it's Tuesday after the close. Listen, so I want to go over a couple things. The S&P we can take a look at, and then bigger picture, I want to talk about the Russell versus the Dow, how I'm playing that. All right, and then we need to go over some FX positions. There's a couple going against me right now, but we're building a core, so I kind of wanted to walk through how I do that, and then we can take a look at the bond market also. All right, so first off on S&Ps. We've touched on this a little bit. I won't erase this just yet. But we have the monthly cycles rolling over, so this is bearish. All right, so from a bear camp or bearish standpoint, this is good. We can see this roll over. There's a lot of room for this to cycle back down, which is encouraging for the bears. Now, if we go to the weekly, not much to say there. I mean, this band structure is still bullish. We made a higher low here in June and July. These are obviously the double bottom lows from earlier in the year. So this is still, I mean, we're still making higher lows. This is still a pretty powerful uptrend. All right, now we can still play this wall or this bearish candle here. I mean, this is the most bearish, what I call real money candle that's really happened since Brexit. So these were tight, narrow range weekly bars. We took out the lows for several weeks. So we're kind of playing this bearish wall now, and I'm fine with doing that. So when we go to the daily, obviously yesterday or Monday or Friday we broke, right? Yesterday we bounced, and now it's back down. So we may be in this period where we have high volatility, the VIX stays high, and you got to expect these ranges. I mean, if you came in early yesterday, all right, down here, and you're anxious to sell, you got to realize how when the VIX widens out, these ranges really expand. So, I mean, we can have 21.15. I mean, these are 50-point ranges easily. All right. So before we were coming in thinking if you could pull out 5 points, it was a decent day during the summer. And so I don't want you to have that mentality on the lows. You got to realize how much these things can bounce. That's why we want to use the 8. We want to use the 30. Okay. Now if we go to the 4-hour and hourly, this is kind of what I mean. If you come in and you're selling down here, you're way below the 8. You're just too oversold. You need to wait for these cycles to come back up. All right. So yesterday, I started selling here at the 8. That was the first spot, about 21.25, that maybe the market would continue its downtrend. All right, but I was aware that this cycle was still fully, I mean, it was rising. At 21.25, this cycle, the percent D was still not even at 50. So I knew I was really early. So my size is really light, and that's important because on days when you have big moves down, you're going to get these nasty bear market bounces. And they can squeeze, I mean, they can go a long ways because they're squeezing everybody that's shorting too early and too low. Right? So if you watch this cycle, then that's going to keep you out of trouble. Right? On the hourly, we can see it a little bit better. All right? Here's my first sale. And then here we're getting high within the range on the hourly cycle, okay? So I was all right selling. But again, I was aware that we hadn't rolled over. And I didn't hit my size till right here. Here and here, I mean, this was a one or two lot, and here I was selling 5 contracts and buying 10 puts up here in this area. Right? So this was 1/10 or 20% of the size I wanted on up here. And I was aware then prepared that we might even go back to 21.70, right? Complete a full pi cycle. I mean, those are the types of massive. When the VIX is high, you can have these nasty snapbacks that create these types of moves. All right, and so sure enough, we failed at the upper bands. All right, and so before I went to sleep last night, I took back some of my futures because I didn't want to have all my size out there. I wanted to have some bullets to put out higher in case we bounced. In the Asia session. all right, and we didn't. So we come in today, took some back. Now, as the 5-minute and the near-term chart rolled over, okay, there's two different trends here we were playing. So we come in this morning, and what was this, 8 o'clock? All right, so now you can see that on the 15-minute chart, the bands were bearish, right? The wave structure is rolling over. All these fan lines, I call those bands or wave formation bands. And here's your 30, which is descending. So it was in a downtrend. We're pretty low than the cycle, right? But then as the 5-minute opened up, we got a bounce back here, which was pi on the 1-minute. So I sold into that, covered some, and then here I was just covering my sales from yesterday. All right, so overall still bearish. This was pretty oversold relative to here. That's why I was covering. Happened to be near the low. So we'll see from here. This is your pivot now. 2160, call it. Okay. That's going to be a key level to keep this intermediate term TMS or technical market structure bearish. It's all about 2160 right now. That's the current pivot. All right, so overall it was a pretty decent day. All right, there was one more thing I could mention. So the futures I peeled off pretty early, and then the puts were the last. I still have a few puts on, and I put this call ratio, not a call ratio, put ratio back spread I put on yesterday when we were, switch my pen, around this candle here. So what I did was go out, oops, all right, so what I did was go out 2135, 2140s. So 2135, 2140. So when the market was 2135, it was right in this area. Okay, I bought 10 of the at the money puts. All right, this is a put ratio back spread. This is what I teach in my option seminars and to the guys on the option team. And then I sold 5 puts at 2140. Okay, so they created this little spread, but these are puts, right? So I'm obviously bearish, and I'm long twice the amount of lower strike puts than I am the higher strike puts. All right, so my risk is very well defined. All right, but I have all the downside. I like the ratio spreads better because you'll hear the majority of traders always talking about vertical spreads. All right, they'll buy 10 puts here and then they'll sell like the 2120s, or they'll go sell the 2100s. But that caps your upside. All right, yeah, you have the same kind of limited risk, but you cap your upside. So I'd rather have the play where I have the same limited risk but all the upside. So what we did there was when I bought 10, when I'm in a 10 by 5 ratio put spread, and the market continued to move against me, what I ended up doing was taking profits on these, I think 3 of them into the highs here of yesterday. So I was short 5, I covered 3. All right. So if you're short here puts, as the market rallies, you make money. So I rang the register on the short side of my puts, okay, and then as the market rolled over, and I took some profits on this side of the puts that I'm long in here, and then you can see now I have 3 left, and I'm only short 1. So I ended up selling 7 of the puts out today long in this area. And then when I sold 5, I covered 3. That left me short 2. And I bought one of those back in the same area now. So now I'm only long 3 puts and short 1. And that's my entire S&P position now because I have 0 futures. All right. All right, let's just stay on equities, and then maybe I'll have to do another video for Forex so it doesn't get too long. Let's see. So S&Ps. Okay, so this is how I'm going to play the intermediate term now from the short side, because this is all bearish. Pi's up here. All right, the TMS is making lower highs now at 2160, so we want to play stocks from the intermediate term on the short side. All right, and I'm lightened up pretty good amount today, so I'd welcome any kind of rally back, because then I can re-short. All right, as far as the long term, I've been highlighting in these videos that I'm short the Russell on the monthly and weekly basis. Okay, so far I sold the high of the monthly candle of the move from the lows. We shorted the highs. All right, this candle this month is September. We'll see if it closes lower, but so far so good. That was the high. All right, now I'm going to add to this again as this cycle is started to roll over. If we have a full cycle, which it doesn't have to happen, we could have something like this, where you'll notice the percent D here is roughly 51. You can watch this change right here, 51. All right, so it's only cycled to the middle of the range. That's possible. But it's also possible to go all the way from the top to the bottom. From the top, cycle to the bottom. So we have a lot of room here. We could cycle lower, and that would bring us, well into 2017 potentially. So we'll see. With point being, I got a lot of room to add because we're really high within the monthly cycle. Go to the weekly level, you can see it a little easier. This is actually a candle where yeah, I didn't add. I'm only short 2 lots. So I need to add to this position. But because I was short a decent amount of S&Ps, had we rallied a little bit further, I would have probably shorted more Russell. So we'll see where we close the week out. This is a candle here where you break all the swing lows. So I teach this in the model too. This is called the swing line setup, where you track the lower lows, and as soon as you can see that there's a swing line that develops. The prior day's low was not taken out for this entire move. The candles didn't close below it until right there. Boom. This candle finally closed below the prior week's low. So you can short that candle right there. Boom. So I should probably take another lot here and short this again. And then my stop will be right above that high. This candle high. Right? So I need to take note and do that tomorrow. Let's get a little bit more short the Russell. And I'll do that on any hourly bounce overnight as well. Right, so this is how I'm going to play the Russell then, from a longer term stance in a longer term short. And again, we're looking for a move back here towards a 30-week. Okay, you could test these lows from Brexit, or we could even get a really longer term move into next year, or just a complete bloodbath into this 1,000 area. Okay, so that's what I'm doing on the Russell now. Watch how I'm going to play the Dow against that. So I'm playing the Dow now from the long side, kind of as a hedge, but you can see how on the chart, I was playing the Dow from the long side. Even in Brexit, when we got knocked down, we bought the lows pretty much that week, because I was using the same kind of strategy where when we get really oversold, I'll buy some Dow futures, just play it really light, and I'll be more aggressive shorting S&Ps and shorting the Russell longer term. But when we get really knocked down, I'll buy the Dow futures small and I'll work a position. And then if we do have a snapback rally, I'll be able to take some profits on the Dow futures, turn around and short the Russell again. Alright, so that's how I play both sides of the market. So we got to look at this one a little bit on a more granular scale. Alright, I mean, I was just trading this around really well all summer. So now that these higher lows have been breaking, we're definitely in a more bearish stance. You can see, other than Brexit, where the bands were bearish, right? So let me change this pen color. Here you can see all the bands were fanned out bearish, right, in this direction, and we were below pi. Okay, that was bearish. Now, since then, everything's been up. The bands are up. Pi is up, right? But now look how we're back below in the southern hemisphere, below the 200, below pi, and you can see all the bands are starting to flare out. So for me to buy the Dow futures, I mean, we really need to be knocked down. Like, yesterday would have been fine to buy a few there, and then I could have lightened them up late in the day yesterday. That's the way to trade it. So when I get really oversold and I'm making the money on the short side and I cover, I'll play this small if we really get to the extremes. Okay, so that's kind of what I'm looking for, a move like this. I think you guys get the point there. So you can see that. You can see that here. Getting tired. So my Russell position I'm in the money on, and it's small. We're going to add to that, right? But you can see I'm out of the money here on the Dow, but I'm only long 3 contracts. So when we really get knocked down, I'll probably buy 2 and 2 more, and then try to get this average down close to the market. And if we get this type of rally like we had, like I said yesterday, then it's just a way to kind of hedge your overall shorts, and that's kind of how you play a long short book. So hopefully I'll be able to show you guys how to do that. And the key is to work the average cost, and you gotta know how to work your size. I call that the art of the size. Right? It's one thing to be able to know how to draw your edges on the chart. It's another thing to know how to work a position. Right? So I think I'm long. This is my last buy. I should have bought something down here. It's alright, sometimes you miss. Alright, so I plan to show you guys how to work both sides of that. So the game plan, short the Russell long term. We're going to hedge with the Dow futures against it. And then I'm also going to play a core short, short the market via S&Ps now that we've rolled over. Right? So that's pretty much it for stocks. And hey, for anyone that's new, you can visit my site. It's jenkinsrm.com. RM is risk management. jenkinsrm.com. It's free to join the trading room. So I'm just building a network of independent traders, both institutional guys, which is my background, or just individual traders, brand new traders, beginner traders, advanced traders. It doesn't really matter. I mean, we're in the room trading everything from Forex, gold futures, options on stocks. We can trade the open. We can trade shares of Apple. I mean, I'm not opposed to trading anything and anything that moves in pretty much any time frame. So that's what we're doing in the room. You guys can check us out there. If you like also some of this, I'm teaching some of the methods here in the model, and I do coaching as well, group coaching sessions. So the next one, I'm probably going to make an announcement here by the end of the week. And starting next week, I'm going to start a new group coaching session. So for anyone that signs up, you'll be at the beginning of the it's an 8-week course, 2 hours a session twice a week. And I mean, this coaching is really going to be all about the model and the process. Sometimes I teach on options, sometimes I teach on the volatility, trading treasuries, the yield curve, but this is really focused on the model, because then you can apply it to any and all markets. So anyway, you can check out the site for more info on that. All right, guys, so that covers stocks today, and then I'll do another video here on it, Forex and bonds real quick for those of you who want to listen.